This is your LMAX Exchange technical update for Thursday, January 19th, 2017. Euro dollar. So the euro has seen an impressive bounce over the past several days, but overall it's important to note that the market is still confined to a downtrend, trading well below the December peak at 108.75 and still below the daily Ichimoku cloud. At this point, a lower top is still favored ahead of the next downside extension back towards that 14-year low at 103.41. At this point, again, we would need to see a break back above 108.75 to negate the current bearish structure. Sterling dollar. So cable has seen a nice bounce this week after stalling shy of that plus 30-year low from back in October, with the market now attempting to recover. At this point, though, the broader chart continues to still favor the downside, with any recovery seen well capped. A break back above the 124.30 area would be required to take the immediate pressure off the downside. Dollar yen. Dollar yen has been in the process of a correction off the recent multi-day high at 118.67, and there is still risk for additional corrective declines into some key previous resistance turn support in the 111.45 area. At this point, however, the broader trend does favor additional upside and look for a lower top somewhere ahead of 110 in favor of that next major upside extension beyond 118.67 and towards 120 further up. Euro Swiss. So Euro Swiss has been tracking lower over the past several months. The market seems to be wanting to gravitate towards a retest of the 2016 base at 106.24. We need to see a break back above 109 to really take the pressure off the downside. Aussie dollar. So Aussie has seen a very impressive run in 2017, but as you can see here, the market is going to start to run into some critical medium-term resistance on this rally above 75. As such, look for the market to stall out over the coming sessions in favor of a resumption of what could be more of a range trade in this market or potential toppish structure. Dollar CAD. So a sharp reversal in dollar CAD in Wednesday trade, with the market stalling shy of 130 and reversing course well back above 132. At this point, the broader structure continues to favor the upside, and the market does remain constructive, potentially opening a retest of the recent highs that we saw all the way up above at 136. We would need to see a break back below 130 to compromise this outlook. Kiwi dollar. So despite the gains that we've been seeing in Kiwi over the past several days, this looks like to be a toppish structure in the Kiwi rate. If you look at the daily chart going back to the 2016 high, it looks like this market should start to find a lower top ahead of that next major downside extension towards next key medium-term support at 66.76. SPX 500. The S&P 500 is trading just off record highs, and the pressure remains firmly on the top side, with the market easily potentially moving up beyond the recent 2280 record high peak and towards the 2300 area further up. At the same time, it would be silly to not consider the possibility of exhaustion here, with the market potentially putting in a double top formation. Of course, again, this is premature, and we would need to see a break below the neckline or the potential neckline at 2232 to confirm such a shift in the structure. Gold. So gold has seen some very impressive gains into 2017, and the market is showing signs of a longer term base that is now being supported at well ahead of 1100. At this point now, look for setbacks to be very well supported in favor of a potential upside surge, eventually back towards a retest of the 2016 high at 1375. Only below 1120 would really compromise this outlook.